What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. And first of all, the mic is back, okay? The mic is fucking back, ready to rock and roll. Warmthy, crispy, nice little sounds are back, okay? Mic is fixed. No more sketchy, glitchy audio. We're back. Now, secondly, I want to apologize for the delay in the post-trading analysis videos. I have just been so busy with running the server, almost having like 3 live streams a day. It's absolutely nuts, but we've been killing it. We've been smashing it. Time management is getting better, and we're back on the post-trading analysis videos, okay? So today we're going to be discussing, because we have taken a lot of trades in the meantime of, the last video towards today's trading day. So I'm just for now going to be discussing today's trading day. And then, if there's no setup tomorrow, I'll make a recap of the videos that I took this entire week with the VIP Discord community. And otherwise, I'll make like a weekly recap later on in the weekend. Okay, so everything is going to be uploaded regarding the trades that we took this week, so everyone here on YouTube is also catched up. So today we took an amazing trade on GBP JPY that, regarding pre-planning, has been one of my best pre-planned trades this entire month so far. Okay, regarding precision and just execution and then perfection. So I'm currently still up in this trade. You can see it on the screen. My target is this range high. However, I have taken a significant amount of money out of the trade right here, around 65 to 70%. The markets are about to close. We're going to get the rollover. We're going to get the spread. So stop loss is still below this low right now, and my final TP is at this high. So it does look like we're going to get there. I'm seeing a tiny reaccumulation model, but we're going to go over the entire trade from macro to micro, like we always do. So just to give you guys, a little glance as to what GBP JPY has been doing on the higher time frame, is that ever since 1995, yes, you heard that right, 1995, we have simply been in a macro range. And we can see that this range has actually been deviating the range low, sweeping a lot of sell side liquidity. So we saw the range low. We saw deviation 1. After deviation 1, you can extend your range low to the deviation low, and we got the second deviation. Now, we got a very aggressive expansion towards the upside after putting in that third tap, confirming the TCT Model 1 accumulation schematic. But from there, we rejected off supply right here, came back down just to mitigate this extreme demand, came up, swept that low, making it your extreme liquidity point, and now we're moving up. So what this is, it's basically a Model 1 accumulation schematic that went over in a Model 2. Okay, it's your Model 1 flowing over in a Model 2, like we have discussed multiple times on the TCT Mentorship Lecture 5B regarding advanced TCT schematics. Okay, so normally what you can expect after having your Model 1 flowing over in a Model 2 is an aggressive follow-through, and not just a normal aggressive follow-through, an aggressive follow-through, sometimes even probably leaving your range, because they truly left no reason for price to come back down again. Like, they truly mitigated everything. So, the objective target, or the order flow objective of this macro accumulation schematic, is still going to be that range high. And we're currently working our way up towards that range high. So from a macro standpoint, the better thing to do is look for high time frame swing longs to take up towards that X marks the spot. Okay. However, we do trade the lower time frame way more than the higher time frames, but it's always nice to know in what context you are trading. So price made its way up towards kind of premium pricing, but right there we had a very good looking order block. You can see right here on the monthly time frame, you can see we had this last bullish candle before the bearish expansion that left a massive fair value gap right here, making this a valid order block with an inefficiency, which is a requirement, in other terms, an OBIF, right? And it was right located in that pivot point of your first, not your first, but of a very good looking lower high and lower low from the top down. So when you have an order block that caused such an aggressive expansion towards the downside lasting multiple months, you can expect a rejection when you come up this quick of that order block, okay? So a rejection was expected also because price took that previous swing high point right here. But from there, it's more that I was expecting a move down to just grab a lot of liquidity and then just continue higher. So instead of particularly calling this massively bearish because you're coming up towards that POI and you break your market structure back to bearish, I wasn't really looking at this from like a lower high for a lower low perspective. Obviously, we can, watch the market structure between this low and that high on the lower time frame, and when that breaks back to bearish, you can indeed confirm the lower high for the lower low. But I was expecting more for that move down to just be like a liquidity flush where a lot of these, late longs just got stopped out. You can see this liquidity curve building up right here that price took out on the right. This aggressive candle is not because people are aggressively shorting. It's because these stop losses are getting triggered of people that were long. And when you're long and your stop loss gets triggered, that causes a buy order. So when I'm on the higher time from like the weekly, no structure has been broken. Matter of fact, on the weekly time frame, this can simply be a higher low for the higher high. So no, we're moving up. We got that rejection from that monthly supply, which was expected. And now we're slowly grinding up again. And I think that slowly grind up can continue itself. So within that slow grind up, we created a range, right? Literally, regarding Forex, guys, you can better always just look for your ranges because most of the time your Forex pairs are simply ranging. So we were in this macro range, or not macro range, I'm going to call it a high time frame range. And from there, we had our range high right here, and then we had our range low right there. And that was basically it. Now, from this range, I was searching for POIs where price could reject in the upper section or bounce from in the lower section. But if you just flicker through your time frames, there isn't really any order block or anything that can hold price up or down. What you basically had before this range was created is you kind of had like liquidity building up right here, kind of in this fashion where you had liquidity building up right here, and you had liquidity building up right here. So there were truly little to no supply zones, and you were just building liquidity on both sides of the range. So whenever that happens, truly the range is neutral because you're hovering around the equilibrium of the range when there's buy side liquidity above and sell side liquidity below. So within this range, I didn't really have a bias as to what side it should sweep first. I was just going to watch my local price action to develop, and then from there, try and catch that trade that sweeps the first liquidity point. So what we saw, if we look at, what it is in front of you right now, is that in this most recent rotation on like the 2-hour time frame, you kind of had lower highs and lower lows all the way down towards this low. Now, and when you're trending down from your most recent range rotation, we pull our range from bottom to top like we always do, and then we have our range. And then this range, we can look for potential accumulation schematics. And as you can see, we had our range high, or had a range low, had a range high, and then we got that deviation 1 on Wednesday, the 13th of November, right on that New York Open. You can see right here, right on New York Open at 15:30, 3:30 UTC plus 1. That's exactly New York Open. So we got that deviation on New York Open, which was already making me, a bit hyped because like those are like the perfect times to put in those liquidity sweeps, put in those deviations for that extra market manipulation. And at that point in time, we were right here. And I was looking at this range and I was like, well, this can be pretty significant, right? Because I'm seeing a range where the range low is getting swept. We're starting to move up, and I'm seeing a lot of buy-side liquidity within the range itself right here. So we had a lot of trendline liquidity right there. We did have one order block right here that we needed to be aware of. And at the point as why I was watching this range, we also had supply right here. So these were kind of the two supply zones that I had. But I knew, hey, this is a potential model 1 or 2 accumulation in the making, right? It is a potential TCT accumulation in the making. And when we saw this in the TCT Discord server, we were starting to pre-plan the trade. So if I give you a little sneak peek as to, my channel here in the VIP Discord community. And if you guys want to join that, it's basically a server where I am live trading with also Wyckoff Insider, who's hosting the London sessions, and I'm hosting the New York sessions. And then we also have educational classes, meme coin nights. It's very active. We currently got like 600 people in the server already, smashing it every day. But what I did right here is, you can see right here at 4:50 p.m. Yesterday, which was the 13th, we were watching on-stream GBP JPY, and we made this pre-planning. You can see right here, we put in that deviation. I have the 2 supply zones, and then I was talking about, hey, I want a move up, kind of wicking that supply zone, coming up, and then coming down with a return to zone. Hopefully here there will be demand that's going to be created, and then we long the Model 2 accumulation. That was the pre-planning, okay? And it was very explained in depth on stream. And, what you can see what happened if we put that side by side. Let me screenshot this for you. If we keep that side by side right here, you can see that price started moving up, right? Price started moving up. But instead of rejecting from that first supply zone and already coming down, it already grabbed that higher or upper located supply zone, which is completely fine, right? That's absolutely completely fine, because it just means there's going to be no supply in our way. Because right here, I said, hey, if we hit that level, that's TP1 with your stop loss to break even. But now that doesn't need to be TP1, because the supply is already mitigated, and mitigated supply is something we don't use. So this didn't really matter that much. It was just a pre-planning. The Model 2 was the main idea. Okay, the Model 2 was truly the main idea. And I was checking, okay, we had this move up. Did we leave behind demand? So I was flickering through my time frames, and you can see right here in that pivot point on New York Open, we left behind this 1 hour order block, which is your extreme demand, and therefore a requirement for price to mitigate if you want to have a valid Model 2. And not only did we create structure on the way up, causing us also to sweep that extreme liquidity. So we had an extreme liquidity sweep and an extreme demand mitigation, kind of confirming that third tap POI from the Model 2 from both perspectives. Because the people that watch the mentorship, they know you need to have an extreme liquidity sweep and or an extreme demand mitigation for your Model 2. So what we're seeing right now is that, we still have that trendline liquidity. And not only do we have the trendline liquidity above, locally, the way that we came down, you can see right here when I open up my Asia session, well, not my Asia session, but my market session indicator right here, that we put in equal highs. We put in equal highs at this high right here, which was your Asia high. And then we came down in this very slow fashion, leaving all these highs intact. So not only do we have amazing liquidity at the top of the range, locally coming down into our potential third tap of the accumulation, we could have yet again another amazing return to zone. So London Open right here, Asia highs are still intact. Your Asia lows are taken, kind of part of being that one model for life, which is going to be the craziest trading model ever. Literally, it's going to be the craziest, most effective trading model. It's going to be VIP exclusive though. But it's basically just backtesting one strategy during multiple sessions, and then giving the people all the data that they need for them to make adjustments in their trading, where they can simply just wake up, decide to trade the London sessions, know what to expect from a month-to-month period, and then actually have free time, and therefore trading not absorbing their entire life. But we came down into this demand, right? This literally being a one model for life type of setup, with your Asia highs intact, while London is opening and Asia lows taken. So I was watching for a market structure break, right? I was watching for a local market structure break coming into my POI. And I was on the 1 minute time frame. We came into our POI and we were making lower highs and lower lows, obviously when we're trending down. And then right here was our 1 minute high, okay? That was our 1 minute high where we broke structure. However, I was a bit hesitant with immediately entering on this 1 minute break. And why was that? Well, we had supply above, right? We had supply above right there. And if I go on the higher time frame, that would be your 2-minute high. So price could simply break your 1 minute back to bullish here, right? Just to make a lower low for, or lower high for a lower low on the 2. So I was a bit skeptical because that supply zone was still there. And on the 45 minute, right? On the 45 minute, there was still an unmitigated demand zone right here. So I was like, we could still make a lower high for a lower low, mitigate that 45-minute demand before going higher. So I was a bit skeptical with immediately just entering on that 1 minute break. I wanted to see the supply fail. Okay, I wanted to see the supply fail. Because if it was going to be just a simple lower high for a lower low, this should have been a break of structure like this, and price should just come down. And this would just be a fake break to trap people into longing the break of structure when it was simply a 2-minute lower high for a lower low. So I was watching closely as to how this supply zone was going to develop, or this reaction from the supply, and we can see that we were doing right this. Now, does this look anything near what I just drew as to what I wanted to see if the supply was going to work? No, we're closing candles in the supply itself, while the supply itself consists of liquidity. So you didn't have a tap and a go. No, you actually found some consolidation within the supply, showcasing the weakness of the supply itself. So at this point in time, I know that, like, okay, we're going to be putting in a higher low for a higher high. This supply is failing, right? You're putting in these equal highs kind of on the 2 minute. We have law of liquidity above. So what I did is I pulled my structure demand from that break of structure just like this. And I put a limit order on the top of that demand with my stop loss below the low. Now, price ended up coming down and I got tagged in the trade just there. Perfect entry, okay? Absolute gorgeous entry. And from there, we were targeting this range high with a 65% TP at the Asia highs. And then, you let the rest run for that 198.449 area, trading the Model 2 accumulation that has a return to zone that meets the requirements of a one model for life type of setup. And also, if you look at the volume profile, you have acceptance back inside the range and you're literally bouncing off the POC, holding the POC and the volume area low as support. Kind of even having some sort of a range inefficiency because there's barely any volume profile activity in the upper section of the range. So, it was the perfect entry. And the risk to reward was around a 1 to 8. You can see a 7.7. Obviously, if we take a TP right here and a TP right there, they'll return into something like an RR of around 5. But basically what happened from there is price just started making its way up, stalled around in here, and hit our TP1. So right here, we took our TP1, which was 65%, and that was 65% at a 5 risk to reward. So I'm realizing around 3 to 5%. So around 3%, more than 3% in profit. Stop loss goes to entry, and I'm letting the rest run for that range high. Whereas if we exit replay mode right now, we're currently doing this. So we were expecting a rejection from there, from that Asia high sweeping that liquidity. So stop loss is currently even moved up more because we're entering the close of the session where swaps can also be incorporated. So stop loss is currently here. Target of the remaining of the 35 position is right there. But we already netted well over 3%. And if we get kicked out, we make, I think, another, I think we're up like 3.3. We make another like 0.5% if we get stopped out there. So all with all, an amazing trade, right? 3 to 4% in the pocket, which is absolutely amazing. And it was pre-planned all in advance the day before. And not only that, I let everyone know I am long on GBP JPY. My exact moment of entry, I told everyone I am long. And then I showcased it as well. And then I basically, this was like a trade given on the silver platter. I said TP1, stop loss to break even, you're welcome. And then there's your funded account. Like it was an amazing setup, And it was just that when you pre-plan a trade so good in advance. There's nothing you need to do but just enter. You don't even need to think. Like, the thought process behind the setup was already long completed when we were pre-planning the trade. And it wasn't particular that price needed to do this, right? It wasn't a prediction. This is just what I wanted to see if I was going to take a trade. And that's exactly what we got. So there was no reason to doubt the setup, no reason to stress in your mind. Like, it was just there on paper. This is exactly what we want to see. Now we just need to execute and stick to our plan, which is what we're currently doing, right? We realized the TP there, stop loss is now trailed, and we're letting it run. So this is preferably how you want what you want your trading to look like just every single day. No random trades, quick market orders, quick outs, and you kind of forget about it. No, high quality A+ setups that are well prepared in advance and then executed in a live trading environment in the proper way, applying proper trade management. This, in my opinion, is one of my most professional setups. There are multiple winning setups, but this was one of the most professional ones, just with the pre-planning, the execution, and the trade management. Just absolute perfection. So very happy with this GBP JPY trade. In general, the JPY pairs have been giving us absolutely beauties. Like, there was another one even today where you had so many accumulations models in one. Like, you had a model 2 accumulation here, where that third tab of the model 2 accumulation had its own little model 1, which you could have traded. And then you can see again right here, a little sneak peek of the one model for life. You can see that your Asia lows are out of the equation. Asia highs are still intact, and guess what this accumulation model does? It goes exactly to these Asia highs right here. That price mitigated, so it's going to be fucking insane, okay? It's going to be absolutely insane. For now, this was going to be it for today. Post-trading analysis videos are back for real now. The mic is also back, so that motivates me even more to talk because I can actually have proper sound. And if you want to know more about my daily activities, you can find me in the TCT trading community. The link to that is in the Discord. I'm also going to be putting like those fixed links of like if you want to trade, Forex. I have an affiliate partnership with Alpha Capital, which is an amazing prop firm. So all that YouTuber stuff, you don't have to use it. It's just that it supports the channel. If you do appreciate the videos, and I see all of you guys in the next one. Peace out.